I didn't even want to have to do a Roku video. I really didn't. But you guys in that comment section have been asking about this Roku IPO and should you buy in and this and that. So I'm like, I really got looking into this company. I got looking into this Roku company, and boy, do I not like what I see, guys. I was looking into it and I was like, I need to short this. I haven't shorted it because I hate to short stocks, and I might not short it, but I'm like, dude, I could make so much money shorting this stock if I actually had the cojones to do it, okay? So let's talk about Roku and why it reminds me. It reminds me literally of GoPro and Fitbit 2.0, honestly. It reminds me so much of GoPro and Fitbit when they went public. It is like sick, guys. It is absolutely sick. So first off, let's look at how these stock prices done. So Roku just went public last week. This stock was supposed to come out at $14. It shot up to $29, over $29 a share like that. Over double, like so fast, it was ridiculous, guys. Oh, you know what? There was another stock that went up super fast. Its name was GoPro. GoPro came public around $24 a share. 4 months later, yes, 4 months later, it was at $98 a share. $98 a share. By the way, GoPro's $11 stock now, so we can kind of see what's happened there. Fitbit, okay? This company, I cannot remember the specific price it came out. I think it was around $17, okay? This stock went to $50, over $50 in a very rapid pace. Now it's a $6 stock, okay? So we're just off the stocks. You can kind of see that some of these hardware type companies that go public that are tech, they can be hot, they can go up. Just because they go up in the short term does not mean they're great investments long term, believe me. There's a lot of traders that play with these and they feel like they can make some money, they push it up, then they short it, and then maybe they go long again, then they short it again down to whatever price, okay? So let's see some similarities that are with all these companies, okay? First off, Roku, what is it? It's a hardware company at the end of the day. That's the main business they sell. They sell those little Roku devices. They have a few different models of them. If you go on Amazon best sellers on the electronics section, you'll see several Roku devices on there, okay? They are a hardware company. That is the main way they make their income. Or I shouldn't even say income. The main way they make their revenue. GoPro, it was the same deal. GoPro, all they sold was cameras back then. They didn't even sell drones or VR cameras or any of the stuff they get into now. All they sold was basic cameras. They just came out with the Hero 4 Silver right after they had went public, and the Hero 4 Silver, or the Hero 4 Black and the Hero 4 Silver. They had just come out with those right after they went public, and that was basically their entire business. That's all they did, was just sell those Hero 4s. Fitbit, same thing. It was a hardware company. They didn't even have smartwatches when they went public. They just sold those basic, bands and a few different models and whatnot. They kept track of your pulse and your heart rate and all that good stuff, guys. Fitbit, hardware company. That's how they made all their money, and that's still how they make all their money too. Now, let's go down from here from the bottom and go up. Now, there was promises about there can be something better than just a hardware company, okay? And all three of these companies were kind of selling the dream that we're more than a hardware company. We're more than a hardware company, okay? Fitbit sold the dream that it could be in a major apps player. Maybe they could even sell apps or something like that. They would be so big in the healthcare space that maybe insurance companies would like force people to get Fitbits and whatnot. It's a really tough sell, and guess what? They do have a great app, but it's a free app that comes with Fitbit. So although it's really good, they don't make any money off that in the end. And then GoPro, they sold the dream that they're going to be a media company, a huge media company. They sold that dream. We're going to be a media company. Well, the issue is GoPro is a media company, but they're not a media company in the sense of they're a multi-billion-dollar media company. They haven't created like a Disney or something like that. They have huge fan bases here on YouTube, on Instagram, on Twitter. Like, you can look on any major platform. There's 1 million GoPro followers or 10 million plus GoPro followers, if you combine them all up. And that's worth something, absolutely, but it's not worth billions of dollars. People thought that was going to transform them into like a multi-billion-dollar business or whatever. No, it's just a great place to advertise and sell your products to your fan base and keep them excited about the types of things you sell. It's not worth billions of dollars, absolutely not. But some people thought, wow, GoPro is going to become a billion-dollar media company. No, absolutely not. And that's part of the reason why the stock shot up to $98. And I was just watching. I'm just like, people have no clue what's going on out there. And then Roku, they sell the dream of, we're just going to keep selling products and services through the Roku devices. So if you buy a movie or buy a show or whatever, Roku makes money on that. And that's their dream right now. And that's what's growing a lot for Roku. But there's some issues with that we're going to get to in just a second on why that dream's a little bit of a false dream as well. Okay, so let's start from here at the bottom. What issues did these stocks come into? Well, Fitbit and GoPro, what issues did they come into, and what do I foresee for Roku having issues? Well, Fitbit ran into Apple. All of a sudden, Apple Watch came out right around 2 years ago, maybe 2.5 years ago it might have been now. And ever since then for Fitbit, it's just been a downward spiral, guys. It's so hard to compete with Apple, especially if it's a category that Apple is competing very seriously on. If Apple really cares about that, which Apple does, you go into any Apple store, and see what the things are at the very front of the store in the huge glass cases that go along the very middle of the store, the main walkway. What are they? They're Apple Watches. Apple cares tremendously about the Apple Watch and getting sales up there, guys. And Fitbit is a direct competitor to them. That's tough. It is tough to compete with Apple, man. Just ask Samsung, one of the most powerful companies in the entire world, one of the most profitable companies in the entire world. Samsung knows how hard it is to compete with Apple. That's why Samsung can't even move as many, tablet units as Apple does. Samsung can't even move as many high-end smartphones. On the lower end, Samsung does great, but on the high end, with the Galaxy devices and the Notes, they don't outsell Apple devices. So, ask them about how hard it is to compete with Apple. Never mind a company as small as Fitbit. That's a tough thing. GoPro ran into the problem of there's only so many people that want to buy GoPros. There's only so many. So at that time when they went IPO'd, they didn't have any other products. Like I said, they didn't have drones, they didn't have VR cameras, they didn't have apps, they didn't have anything else, man. And their accessories were even limited at that time. They didn't have handheld gimbals or any of that stuff. So they were just a camera company. That's all they had to sell was those little cameras, and if they didn't sell that, they had nothing else to sell at the end of the day, and there's only so many people that want to buy that. Maybe there's only 3 to 5 million people a year who actually want to buy a GoPro camera. So that's fine now that the stock's way down here, but when it was $98, that's not so okay, okay? And Roku, what's the issue with Roku? What do I see Roku running into here? Well, TVs, smart TVs, almost every TV out there all of a sudden has all these apps already installed in them. Even a lot of them even have systems where you can actually buy movies and stuff through the apps now. So that's a huge competitor. I mean, I have 2013 Vizio smart TV laying down there on the floor, which I never even used. That's why it's laying down there on the floor. And that TV was ahead of its time. That was like really cool in 2013 to have a smart TV. Now it's like just commonplace for TVs to be smart TVs and have Netflix and all these different apps installed. And the other issue Roku has is they're a direct competitor with Apple. Apple is taking the Apple TV more and more serious over the last couple of years. It was kind of like just a little pet project for them, prior to about 2 years ago. Now they're taking up way higher levels. So they're directly competing with Apple. And guess what happens when you directly compete with Apple? Usually not good things for you. Usually not good things. And Roku devices, hardware devices sales were actually down through the first 6 months this year. Down, guys. So not only are they already going down, so that is a really bad sign, guys. It's not fun to compete with Apple, especially directly. Now let's talk about were these companies actually making any money? Were they making profits or were they taking losses? Well, in Fitbit's case, they were profitable. They were actually making money on the bottom line. Same thing with GoPro. They were profitable. They were actually making money on the bottom line. Roku has never made a profit in its 15 years of existence. Never made a profit. Always unprofitable. Always unprofitable, and I feel like their business is going to get tougher and tougher as time goes on, guys. That's not such a good sign. So as we see here, Roku is just one of those stocks that I will not be buying. I can't see myself buying this for any reason unless somehow they come out with something that's not directly related to something they already have and that exists already, and maybe it's something so exciting, but I cannot see myself buying that stock. Will I short it? Probably not, because I get scared of shorting stocks. Sometimes I buy put options on stocks, but because of IPO, there's very little put option action even out there. So that's probably not that interesting to me. If it did skyrocket up again, I probably would short at some point, because it would just be insane, guys. But we can see, like, this is literally GoPro and Fitbit 2.0. It literally is, guys. A stock that, you know, flew up here, and it's a hardware company at the end of the day. And I just think their business is going to get tougher and tougher. So maybe there's value at that somewhere, but it sure as heck is not in the 20s. It's not even at what it went IPO'd at, in my opinion, because you got to remember, when companies go IPO, always remember this, they're usually overvalued 100%, almost 100% of the time, like 99.9% of the time. That's why I never ever buy an IPO. Yeah, you can maybe make a great gain, but if you're a fundamental investor, you don't buy overpriced companies. That's what they are when they go public. They're already overpriced, because who's going to go public without an overpriced valuation? No one. You would just stay a private company at the end of the day, guys. So I hope you enjoyed learning about Roku and kind of how it's, you know, GoPro and Fitbit 2.0. Thank you for watching, guys, and have a great day.